My name is Bryan Tilden. During my career in the insurance industry, I've taught classes for over 40 years, both in the classroom and online. My topic today is a short history of inland marine insurance. In England, and in fact generally throughout the world outside the United States, marine insurance tends to be coverage of marine adventures and losses incidental to sea voyages. A marine adventure may be a mixture of sea and land perils. This understanding was first codified in the English Marine Insurance Act of 1906. Many years ago, most commerce was over the seas or inland waterways. Land transportation was slow and laborious. Cities were built near harbors and on waterways where ships could dock and discharge their cargo. It was customary to receive the goods as they were discharged shipside. Marine insurance covered the goods against loss while on the ship, and the recipient, or consignee, took responsibility when the goods were unloaded. Land transportation improved as railroads were built inland from the waterways and oceans. Merchants no longer met the ship at the wharves, and the goods were reshipped to them by railroads. Consignees did not want to bother about securing insurance coverage for each shipment they received from overseas, so they asked for the ocean marine insurance to be extended to provide coverage to the final destination. The ocean marine insurance was extended for the transportation exposure by the means of the warehouse-to-warehouse clause. It was included as part of the coverage of the ocean marine policy, but was a distinct and new coverage because it insured goods being carried on land as well as on sea. It became customary for the warehouse-to-warehouse clause to cover from the original point of shipment until the goods arrived at their final destination, no matter how far inland it might be. The phrase inland marine insurance was first used in the United States in 1921. Prior to 1921, all insurance for property in transit was called marine insurance in the United States. Inland marine insurance was developed to meet the needs of individuals and businesses that emerged out of the economic expansion and social changes that followed World War I. After the war, there was a dispersal of wealth at the same time that a post-war crime wave was engulfing the country. Many people had diamond rings and fur coats, and more people were interested in stealing them. At that time, fixed location insurance covered against relatively few hazards. Fur coats and jewelry had to be worn to be useful, and they were frequently subject to transit hazards. The 1920s saw another development in business that was to affect the insurance of transportation risk. Ambitious store owners saw that the savings to be made by quantity purchases, and they branched out. This process spread throughout the country, and the great chain store systems developed. Inland marine underwriters were able to write floater policies giving all-risk coverage. Chain store proprietors became familiar with broad transportation insurance policies and wanted their stock insured in the same manner. Underwriters reasoned that this was a transit risk inasmuch as the goods were insured during transit and would remain in the store a short time before being sold. It became evident by the insurance industry and state regulators that some demarcation should be drawn between inland marine business and other sections of the insurance industry. The New York State Insurance Superintendent issued a ruling effective September 30, 1932, that defined the circumstances under which property could be insured under a marine or inland marine policy in New York. There was a strong feeling in the insurance industry and the various state insurance departments that some action should be taken on a national basis to define the underwriting powers of marine underwriters. This resulted in the adoption of the nationwide definition. It's important to note that the document was a definition and interpretation of the underwriting powers of marine and transportation underwriters. During the late 40s and the early 50s, state insurance laws were modified so that in all states, an insurance company with adequate financial resources could write both fire and casualty insurance. The definition is now used to report premiums and losses on the exhibit of premium and losses on the annual statement of the Departments of Insurance. Line 8 is ocean marine, and line 9 is inland marine. Line of business, as a term of art, references the lines on the exhibit of premium and losses. This concludes the history of inland marine. As you prepare the coursework, read carefully and study the content. Work through and study the examples and knowledge checks. Measure your mastery of the material and review any notes you made during your course of study. This will not only help you pass the exam, but also improve your knowledge and skill as an insurance professional, allowing you to do better service for your customers. All the best of success on the commercial multi-lines examination.